Greetings, Traders Club members. Okay, so as promised, okay, I'll be doing a pre-BOE, as to what to expect, okay, for the upcoming Bank of England meeting that will be carried out tomorrow at, let me get the time right, all right? It will be held at 2:00 GMT plus 8, all right? And there will be a press conference as well at 21:00 GMT plus 8. Okay, so before I go into what to expect for the meeting tomorrow, let's just do a quick recap of what happened during the previous meeting. Okay, so during the previous meeting, interest rate were held unchanged. Okay, pretty much expected. Quantitative easing carry on at this current pace. Okay, no change as well. However, okay, they did drop something hawkish. Okay, they did drop a hawkish tone. All right. So what you're looking right now is the September's policy statements and minutes. Okay, so what I'm going to show you is a couple of paragraphs from the minutes that is quite hawkish, I would say. 60, 65, and 68. All right. So point 65. All members in this group agreed that any future initial tightening of monetary policy should be implemented by an increase in bank rate, even if that tightening became appropriate before the end of the existing UK government bond asset purchase program. Okay, so what they're trying to say here is that a hike in interest rate can actually take place before the QE were to end. So if you guys remember, for most of the major central banks like the Federal Reserve or the Reserve Bank of New Zealand, they will actually require quantitative easing to end before considering a rate hike, right? I mean, like what Jerome Powell has mentioned recently, the start of a QE tapering does not imply that interest rate will be coming up soon, okay? And as seen from the Reserve Bank of New Zealand as well, okay, they put a halt in their quantitative easing, okay, before actually carrying out a 0.25% hike in interest rates, right? So many of the central banks are actually adopting this sequence, okay, of monetary policy tightening. However, for our dear Bank of England over here, okay, it seems clear, all right, that all the committee members, okay, unanimously agreed that we don't have to wait for our QE to end before carrying out any interest rate hike. Personally, I'm not very sure why is that the case, okay, but there's a bit of a difference when it comes to quantitative easing carried out by the Bank of England and some other central banks, okay. So for example, for the Fed, okay, they're actually purchasing assets at a pace of $120 billion per month, okay. Then for the Bank of Canada, they started off with, I think, 5 billion Canadian dollars of assets purchased per week, all right? So a rate is being given, right? A pace is being given. However, in the case of the Bank of England, okay, they did not provide any case. They just highlighted that the total assets to be purchased is I think some 890 billion or something around the figure, like 850 or 890 billion figures. Okay, so the rate changes. Okay, the rate changes. How do we know that? Because if you guys remember, for the previous, I think I've been mentioning about this a couple of times already, when the Bank of England actually slowed down the pace of the purchases, the assets purchased. Okay, and during in an initial state, the market actually think that this is considered a tapering, right? But the governor of the Bank of England, okay, actually came out and said that that's not a tapering, okay, that's just some, something like what the ECB's President Christine Lagarde has mentioned, something like a recalibration, right? So it's not considered a tapering somehow for some reason, okay, from their point of view, all right? So, which is why this, what do you call that? This monetary policy adopted by the central bank, the Bank of England, is a bit different from the, like the US Federal Reserve or the New Zealand's Reserve Bank of New Zealand or the Canada's Bank of Canada. Okay, there's no pace being given. The pace is up to the members, up to the central bank to adjust from time to time. All right, and it doesn't seem as big to have as big of an impact as the other, central banks at the Bank of Canada and so on and so forth, right? Because when they taper from, for example, the Bank of Canada taper from 5 to 4 billion Canadian dollars per week, okay, we can expect, quantitative easing to be, coming to an end soon, right? But for the Bank of England, or maybe in the case of the ECB as well, we can't really do that because they have a figure to achieve, right? Sort of like a KPI, an amount of bonds to be purchased before they call it an end, right? An end to the quantitative easing. So that's how they work, all right? So I'm not exactly sure if it's because of that difference, okay, in terms of bond buying, bond assets purchases, okay, that the committee members actually felt that, we don't have to wait for QE to end before rising interest rates, okay? Especially during this period of time when we are actually seeing strong rise in inflation, okay? Which brings me to the next point over here, okay, point 68. At its previous meeting, the committee had judged that should the economy evolve broadly in line with the central projections in the August monetary policy report, some modest tightening of monetary policy over the forecast period was likely to be necessary, okay, to be consistent with meeting the inflation target sustainably in the medium term, okay? So what is what is line lengthy, sentence over here is trying to say is that, so during the August meeting, okay, they actually released a quarterly projection, right? And, should the, well, this is actually from the October's meeting, all right? So back in October, the members actually highlighted that, if the economic progress is actually in line with the projection, okay, released back in August, okay, then, some form of tightening of monetary policy, okay, tightening of monetary policy can mean, quantitative easing tapering, and can also mean hike in interest rate, okay? So a hike in interest rate is also called tightening of monetary policy, while a cut in interest rate, okay, is also called as is also known as monetary policy loosening, okay, loosening of monetary policy. So over here, we are seeing a potential tightening of monetary policy in a case whereby the economic progress, okay, is actually in line with the August projection. All right. So the most recent annual inflation data that was released, I think it was 3.1%, okay, as opposed to the forecasted figure of 3.2%. To be honest, 3.1% is still very high. Okay, first of all, it's very high. Secondly, okay, as of the previous meeting, they also mentioned that inflation has, surpassed their the central bank's target, 2 to 3% targets. All right. Well, not 2 to 3%, sorry, a 2% target, okay? As you can see over here, 0.66, inflation was likely to remain above the 2% targets, okay? So some central banks actually have a targeted range for inflation, like 2 to 3%, like the Reserve Bank of Australia, okay? While some others, like the Bank of England, actually has a point, a target, just a specific figure, okay? For the inflation targets. In this case, it's 2%, okay? And 3.1% per year is, is way above the 2% target, all right? So because of this recent strong rise in inflation, the central bank is actually, thinking, maybe it's time we carry out some form of tightening, some form of monetary policy tightening, okay? And since they have already mentioned that, we don't have to wait for QE to end before increasing interest rates, all right? This time around, okay, during this meeting tomorrow, we can expect a hike in interest rate coming from the Bank of England, okay? So, how much should we expect? Okay, this is always a very tricky, I would say, figure to speculate. All right. Personally, I think it won't be too much. All right. Okay. I'll tell you guys why is it the case later. All right. So I personally am looking at like 0.1 or 0.15, no more than 0.2% hike. Okay. So yeah, you guys can expect a hike in interest rates. And okay, so since there is a press conference, okay, any changes being made, okay, suppose a rate hike were to take place, we will be hearing from Governor Andrew Bailey, okay, at 2100 GMT plus 8. Now, during this time, yeah, I expect high volatility coming from the pound pairs, okay, pound yen, pound dollar, and pound Aussie, pound Kiwi, and so on and so forth, okay. So he will be addressing the public on why why the action of a rate hike if they were to carry out a rate hike, and if they were to not carry out a rate hike, he will probably explain why is that the case, why is it that you guys drop a clear hint, okay, recently that a rate hike can be expected in 2021, okay, this year, okay, and then right now you guys are not doing a rate hike, so why is that the case, okay? So if the Bank of England were to carry out a rate hike, all right, Governor Bailey, okay, may actually highlight this point over here, right? A rate hike this time around, okay, does not mean more hikes are coming. Okay, what does this mean, right? I mean, normally we will see, like, I mean, especially like during this period of time during the COVID pandemic, we see a strong drop in interest rate, okay, a strong cut in interest rate, or over several occasions, okay, and interest rate are at an all-time low kind of level, right? So if they were to start increasing interest rates, normally we can actually expect more interest rates to follow, right? Because if they are ready to tighten the policy due to sustained economic growth or economic recovery, then it's fair game, right, for them to actually carry more and more, say for example, QE tapering or a hike in interest rates. However, this time around, if they were to hike, it may very well be I would say, a dovish hike. Okay, dovish in the sense that the BOE may just send a message across the market saying that, you know what, you guys don't get all too excited so early, all right? Because the reason for them to hike interest rate may very well be it's just an attempt to suppress the upwards inflation pressure that that the UK is facing right now. Okay, so it may be a 1 or 2 time kind of interest rates, a small ones, okay, maybe like 0.1 or 0.15% kind of hike for November and December, or maybe for November and next February, okay, and then what goes on for next year onwards, from quarter 2 onwards, quarter 2 2022 onwards, it all depends. Okay, it doesn't mean that once we start the ball rolling, the ball keeps rolling and rolling and so on and so forth, and they will just keep rising rates. It's unlikely going to be the case. So the Bank of England may actually highlight this point over here. So a dovish hike. What does this mean in terms of price? Okay, so a hike in interest rate usually leads to a strengthening in the currency. Okay, so if the central bank were to hike interest rate tomorrow, okay, we may be seeing a brief strengthening of pound, okay, across the board. All right, for how long? Probably up to 1 hour, until Bailey comes in and send you guys the dovish message. Okay, so if Bailey is going to highlight that this hike does not mean more hikes are coming and things like that, then yeah, we are probably going to see pound starts weakening back down, and it may even be it may even cross where it actually started. All right, it may even weaken more than it actually strengthened due to the rate hike. Okay, so this is why we can actually expect a dovish hike coming from the central bank. Okay, because the hike is just going to be it's just going to be to suppress the upwards inflation pressure. Okay, for now. All right, and then we'll see how things unfold. How COVID cases, how the COVID situation unfolds itself, and how the economic recovery will go on. If inflation were to carry on rising very high, okay, then they may consider another one in the near future, probably in the next year. All right. So that's for interest rates and quantitative easing. Okay, so for quantitative easing wise, unlikely they are going to carry out any changes. So personally, I don't think they're going to taper. Okay. Well, depending on what do you mean by tapering, right? I mean, for the Bank of England, a slowing down of pace of the assets purchase is not considered a QE tapering. Okay. Personally, I feel that QE may not be the main point of focus tomorrow, okay, unless the central bank were to announce the end of its quantitative easing, the end of its assets purchase program, okay, then there will be something. Otherwise, yeah, unlikely QE is going to be the point. So just focus on the interest rate, okay? And okay, how do we know if this interest rate hike is unanimous or not, right? So there is actually a voting figure. So I think as of now, it's 9 members. As of the previous meeting, okay, as of the previous meeting in September, all 9 voting members voted for interest rate to remain unchanged at its current low level, okay? Now, if we were to see a hike in interest rate, okay, chances are it may not be a unanimous decision, okay? Unanimous being, all 9 members voted for a hike in interest rate. We may be seeing, I don't know, just enough for interest rate to be hiked, maybe 5 against 4, okay, or maybe 5 against 3 or 5 against 2, okay. At least one of the member that I know, okay, not personally, but I know by its name of Silvana or something like that, okay. She is considered a DALF. A DALF meaning someone who is dovish, a committee member that's dovish, who is less inclined towards rate hike, and it's more it's less inclined towards rate hike, but more inclined towards rate cut. Okay, so I'm pretty sure she's going to vote against a rate hike. Okay, because it may be too soon from her point of view. All right, for the central bank to actually hike interest rates. So yeah, the voting figure will actually give us an insight to whether the decision to hike is unanimous, or is it like here and there and things like that. All right, some members agreeing to the hike, some members going against the hike, and so on, right? Okay, so apart from that, okay, QE interest rates and the voting figures, the quarterly economic projection materials will also be released. Okay, the last time it was released was back in August, 3 months down the road. Now we're in September. A new set of quarterly economic projections will be released. Okay, pay attention to the economic projection figures. Okay, we will want to pay particular attention to its inflation projection. Okay, inflation. It has been the key around the world for the past 6 months at least. Okay, so we will want to see if the Bank of England carry out any upwards revision. Okay, upwards revision to inflation expectation. Now, in the case whereby they actually revise its inflation projection upwards for 2022, 2023, 2021, like I mentioned earlier on today, 2021 is coming to an end, 2 more months. So, the main emphasis, the focus will be on 2022 and 2023. Okay, so if they were to carry out any upwards revision to inflation projection, okay, that means, well, they're expecting inflation to rise more, right? So that may actually add on to the likelihood that we'll be seeing another rate hike, or a higher chance of rate hike coming in for 2022. Okay. Apart from the inflation, also take note of the GDP projections and the unemployment rate projections as well. Okay, because any upwards revision to the GDP projections and downwards unemployment rate projections, that will actually lead to, or that will simply means, more hawkish outlook coming from the central bank. Okay, now, should you guys trade this news? All right, I wouldn't say you guys should or should not trade. All right, I mean, if you guys are tired, then maybe not trade it. If you guys want to look for trading opportunities and things like that, then I'll go ahead, right? Personally, I feel that there are many trading opportunities for this news. Okay, apart from the FOMC meeting that will be coming up tomorrow at 0200 GMT plus 8, all right, which definitely have tons of trading opportunities. I'm telling you guys right now, right? The Bank of England monetary policy decision will provide tons of trading opportunities as well. However, okay, please, people, please, traders, please, guys, if you guys plan to trade the FOMC or the BOE, scalp. Seriously, keep your trades really, really short term, okay? Especially when we have, press conference and things like that. And to be honest with you guys, this Bank of England meeting this time around, okay, it may not be as easy to interpret what's in their mind, as, the previous meeting, okay? They may hide, like what I've mentioned earlier on, may sound a bit confusing. Some of you may have to watch this video 2 or 3 times and things like that to actually, catch what I say. But don't worry, okay? You guys are unsure about any part, just post your questions in the Ecofin platform, right? And then we'll just talk about it here, and I'll try to type it out clearly so that you guys can understand it. I'll try to break things down into easier understanding. No jargons, okay? I'll try to strip off all the jargons and try to explain it clearly, okay? Because I know that some of you guys are new to trading, and monetary policy is really a mouthful to handle, right? It's a lot to handle, okay? So if you guys want to trade short term, because a rate hike may not mean the pound may actually strengthen for long, because if it's going to be a dovish hike, you may see a 1 or 2 minutes of, 50 pips shoot up and things like that. And then before you guys actually enter a trade, or maybe right after you guys enter a trade, it may start declining because there's just one line over there that says that this hike does not imply more hikes in the future. That's it. It just spoils the whole, evening, morning, or afternoon, depending on where you are, right? So if you guys are trading, just keep your trades short term and scalp if you can. Don't be greedy and go for like 50 or 60 pips and things like that. All right. If you guys spot any consolidation, a tight consolidation, a Bollinger squeeze, or ranging across and things like that within a tight range, then you guys may want to try carrying out the straddle strategy, whereby you put a buy stop and sell stop order, okay, and then once it triggers, immediately right after that, close the other position, okay, close the other position, because you don't want price to keep your buy stop and sell stop order. It is really bad, okay? It's really bad, especially during high volatile period like this, monetary policy meeting, when we can actually be expecting changes in monetary policy to take place, okay? So with that, yeah, I think I've covered what I want to say about the BOE. So yeah, trade safe, keep our trade short term. This video will be up in probably a couple of hours time and things like that. Yeah, any questions, okay, just post it in the Ecofin platform, all right? I would rather you guys, okay, even if you guys are not trading, and you guys just want to learn about, what's going on in the Bank of England monetary policy and things like that, I would rather you guys ask it before the meeting, and then, look at how the statement turns out, listen to the press conference, and then you guys, it will help you guys in understanding the outcome, okay, the result faster, easier, more efficiently, rather than waiting everything to be over before we carry out this whole discussion about it. All right. So with that, I will see you guys on Friday. All right. So tomorrow, Thursday, there will be no currency call, remember, guys, because it's public holiday in Singapore. Okay. So with that, I will cover, what goes down in the BOE, OPEC plus, FOMC, and things like that on Friday during the currency call. All right. With that, I'll see you guys on Friday. Take care for now. Bye bye.